Last night, Genesis Capital filed for Chapter 11 bankruptcy. We've been waiting for this since November. We didn't want it to happen, but we did think it was going to happen for quite a while. Let's dig into this news as it is hot off the press. So late last night, late Thursday night, Genesis Capital filed for Chapter 11 bankruptcy. We're still finding out what that means, but we do know they have about $3.5 billion in liabilities, over 100,000 creditors ranging from DRW to FTX and many others. This is a huge bombshell for the crypto industry. Of course, this follows after Celsius, Voyager, Terra Luna, 3AC, FTX, and now Genesis. So the other shoe has definitely dropped. Adam, I'm going to throw a story over to you to get some thoughts on it. We have so many headlines to pick our way through this morning. There's a lot of money on the table, and a lot of heads are about to roll.
Yeah, this is definitely one that's been a long time coming, much anticipated sort of since the collapse of FTX back in November. It was sort of anticipated that this would happen, and now we have indeed seen it come to fruition. So the kind of one of the interesting things that jumped out to me on this, not necessarily the right place to start here, but something that's interesting is that the largest creditor on FTX's books is actually Genesis, which sort of just goes to show the interconnectedness that exists between all of these larger centralized financial institutions that are really operating primarily in the world of cryptocurrency. So that's why you get these kind of aggressive contagion rounds, right? It's kind of like the traditional financial environment, except there are no guardrails. There's nobody who's going to bail anybody out. And every time we see somebody try to bail somebody out, we see, oh, actually, one, either that's not going to happen because it's real money that needs to go in, or two, you can't solve a criminal problem just by pumping more money into it, which again, in many of these cases, the allocations have shown. So I think that's kind of an interesting place to start. I'll also note that Danny Nelson has a new story that just came out a minute or two ago, which actually puts the total liabilities filed at about $5.1 billion. So that number has gone up over the course of the last couple of hours while we've been watching this story develop. Sam, where are you on this one?
Yeah, you kind of mentioned how a lot of big players are impacted by this. Obviously, Genesis was a big creditor to FTX, but in the other direction, there's of course Gemini, which was running its yield product, Gemini Earn, by essentially lending out a bunch of its users' money through Genesis, and it ended up being very public about this. The Winklevi, the Facebook quote maybe co-founder twins, were the ones who were behind that. Anyway, they came out hard against Barry Silbert at the head of DCG, which is the parent company of CoinDesk and of Genesis, saying that he really drug his feet in the lead up to this entire bankruptcy filing process. And anyway, there's a lot more to say about the contagion. We'll get to that too, but I'm kind of curious maybe to turn back to you, Will, if you have any insight or thoughts in terms of, now we have, like you said, at long last seen this bankruptcy filing happen, but we saw it coming for a while. And Barry has been accused of dragging his feet. What did he lose or gain by waiting this long? What do you think just happened?
Yeah, that's $1 million question, and one we're going to have to ply through over the next few weeks. What did Barry Silbert at DCG know? Of course, DCG owns CoinDesk, so a quick disclosure there. What did he know? When did he make decisions on this? And why did he make those decisions? We can even go back to May this year, guys. Remember FTX, or not FTX, but Terra Luna imploded. And around that same time, Barry Silbert tweeted out that there was a daisy chain of different parties within crypto who owed liabilities to each other. And it was important to know who was on the other side of those liabilities and those assets, right? And it seems like DCG was in fact on the other side of many of those bad bets because of Genesis, its fully owned subsidiary. And we know that DCG around that time also took on a lot of the liabilities of Genesis after Genesis basically went insolvent from a lot of its bad bets and its loans to 3AC. So I think you're totally correct on that question there. Hopefully we get some more answers. The one thing I want to point to next, however, is the impact of this. I don't think we can really underestimate or overestimate right now what this is going to be like, because there's so many different parties involved in Genesis. Genesis was the bellwether. They were the largest loan operator within crypto. I think last year was over $124 billion in loan originations. Someone can fact check me on that, of course, but it was quite a large amount of loan originations that went out to so many different places in the crypto universe, and a lot of people were actually pouring money into them as well. So the first one we should talk about is Gemini with their Earn program, which we've covered many times on the Hash Withdrawals on that program were stopped in November. They've been sued, both Genesis and Gemini, by the SEC, and people are questioning what's going to happen there, especially with this Chapter 11 filing from Genesis. And then even going more deeper, we know that you can invest in Genesis through subsidiaries, right, or through like little shell organizations of things in that nature. So one story we have on CoinDesk right now is that the Fairfax County, Virginia pension fund is actually exposed to Genesis for about $35 million. So if you think about it, like there could be lots of normal mom and pop investment firms invested in Genesis, and they invest in someone else, and that investment firm invested in Genesis, and now those funds are all at risk. So for the crypto world writ large, this has huge importance. I don't think we see an end to this for quite a while, probably years. Adam, back over to you.
Yeah, so I have a couple of thoughts here. First off, to the question of what does DCG or Barry get from having delayed to this point, I don't think it's what they get. I think it's what they got. And what they got was an opportunity to try to solve this in a way that didn't involve going through a formal bankruptcy process. There are a lot of different ways that could have happened. They could have taken on new investment. We know that they were out seeking investment. We also know that they could have, were trying to negotiate basically a prepackaged bankruptcy, where rather than having the process play out in a court and need to go through a very lengthy process that we've now seen several other entities, including Celsius and Voyager, start the process of, but certainly not exit yet, even after 6 months, more than 6 months in those cases. They would have basically just say, hey, we've already made the deals with our creditors. Here's what's going to happen. Can you ratify this? And then that would have been a much shorter process, a process that probably would have left them much better off, because once you kind of open this can of worms, we don't really know where this thing's going to go. And I think that uncertainty creates a lot of problems, really, for a lot of participants in the industry. But it's also interesting to note that the price of Bitcoin, price of cryptocurrency is largely up today, really kind of green markets across the board. And that kind of says that this is something that people have been thinking about, anticipating for quite a while. And so it's not like it actually comes as a negative surprise. The fact that it's no longer a thing we have to anticipate, that we have to worry about, markets, at least for the moment, seem to have taken this as a more positive sign than a negative sign, if just because it was so expected. Will, back over to you.
Yeah, I want to bring up the story that you mentioned a few minutes ago, now that we have the lower thirds for it. The Genesis is actually claiming a $5.1 billion in liabilities, according to their new interim CEO. Of course, they had that leadership shuffle back in the summer when the issues at Genesis first came to light. And then, of course, they had the second misstep with the collapse of FTX. They lost about $100 million plus on the FTX platform. And then they also had a lot of loan originations out to Alameda that seemed to have gone into thin air. But this is a pretty interesting filing. This is larger than we first thought. And if you go back to other filings we know from earlier this year, when you have that form that you're filing for Chapter 11 bankruptcy, you say the amount of creditors in like a wide range, wide swath, because you just have a few checks, a few boxes to check off. And then you also have the liabilities, and it's typically between $1 and $10 billion is what we've seen. And now we have like a little bit more granularity on what these liabilities are. And this is a lot of money, $5.1 billion, just to put that in perspective. I mean, this was the total market cap for Bitcoin not too long ago. And right now, Bitcoin's market cap, I believe, is around $300 billion. That might have changed with the price movements recently, but this is a lot of money that is just gone. Like, where are people going to find this? I'm going to throw it back over to Sam.
Yeah, you mentioned, we talked before about this Fairfax County, Virginia pension fund that was exposed to the Genesis bankruptcy. We also know there was an article that CoinDesk put up today from Jamie Carley about how Cumberland, which is a big trading desk in the crypto land, in the crypto world, they are apparently, according to the Genesis filing, out $18 million in terms of their claim against the firm. But now they're saying, they being Cumberland, that the bankruptcy filing was misleading with incorrect information. They tweeted something out about this, and I'm sure we'll hear a bunch more. They want to make it look like their exposure was smaller than it was reported in the filing. But I do think that this kind of gives us a launching off point to talk about something that I think we do have as a benefit of the way in which this bankruptcy process, all bankruptcies are different, has gone so far, which is that we actually not only, as we've talked about, have seen the large or the size of the assets or the creditor group that is out, like in terms of $3.5 billion or something. But we also see the top 50 creditors, are owed $3.5 billion. We don't only see that number of 50, but we see their names. And that's not actually something that we see in every single filing. It has to do with the type of bankruptcy it is. It has to do with the court, the jurisdiction, something that we haven't seen in FTX. And there's a lot of news organizations. I think that CoinDesk entered as part of like some challenge to get FTX to disclose its top creditors. But anyway, this is all to say that I think one of the advantages that we have here with Genesis is we do get to see that, for example, a pension fund was exposed. This is something that we have not seen yet when it comes to FTX. And so the contagion effect is a lot easier to measure, I guess, in this case. So for me, one side note to this is that this is good evidence for why some of those disclosures are helpful. I'm not sure who wants to talk next. I think I saw two fingers going up. Go ahead.
Yeah, so there's, I think, a bunch of things to say here. The first is that, Will, you said that like there's a $5.1 billion hole as far as liabilities. We don't know how many assets they have. So I feel like it's not really safe to say at this point that that's how big the hole is. That's how big the number is that they owe to their folks. But that doesn't necessarily mean that that's what the problem is. We might find that the problem is a $2 billion problem. Still a gigantic problem. Again, the scale of the thing is hard to kind of wrap your head around, but it is, again, pretty massive. And we continue to see this from these really large centralized companies. The other thing that I think is important to note is that the reason why we keep seeing these issues is partly because of the interconnectedness, but also partly because of this global hunt for yield that basically central banks have kind of shuttled, everyone down over the course of the last dozen years or so, where basically by artificially depressing interest rates, you kind of take away the ability to have safe bets where it's like, hey, I'm keeping my money in the bank, I'm earning 5% interest on it per year. And like that was a reality back, maybe 20 years ago. It's not a reality today. In anything other than very risky spaces. And I think that also then speaks to the pension fund question, which is, you look at a pension fund like the Fairfax County one, and I believe it's a multi-billion-dollar fund. I think that they have more than $5 billion of assets under management. So $35 million is not a big bet for them. And even if they lose all of it, it's not going to hurt them much. But it speaks to the broader problem that exists when you tamper with monetary policy in ways that central banks and governments have been doing for the last dozen or so years, where you basically remove the opportunity to have safe return that can be low, because that's what pension funds are designed to do. They're designed to take money from people who are saving for their retirement and then to invest that money in ways that are safe and prudent and allow them to using a combination of new money coming in from people who are continuing to work and interest off of what they returns off of what they invest into. That's how they make their money. So if you say, all right, well, the only ways that you can safely do things now is to earn a 1/4 point yield or 1/2 point of yield on an annual basis, that's insufficient to meet the need. And so you find these companies that should be the most boring companies in the world, the insurance companies, the pension companies, instead just being shoved down this chute into the same risk bucket as everybody else is in. And that, again, is not a natural thing. That is purely because there is no alternative thanks to the monetary policy decisions our leaders have and continue to make. Well,
yeah, definitely agree with you there. I do think it's notable and a big increasing topic of conversation that a lot of these firms did invest in Bitcoin or did invest in firms that were adjacent to Bitcoin, and they lost the bag, right? So in 2020, 2021, the story was institutional adoption. And with all these Chapter 11 filings occurring, I don't think you see as many institutions jumping into crypto as easily as they would have in the past. Might have just only been $35 million, but that's $35 million they don't have anymore. Or at least right now. They could get it back through the Chapter 11 process. We don't quite know yet.